Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Hello, and welcome to the India Fintech Diaries, the show where we talk about all things Indian fintech. It's been a crazy roller coaster for a year, Hemant. And when the year started, I didn't think that this much would have happened just by December.
It's been a crazy eventful year for fintech both in India and globally. And to do a year-end retrospective, we have Osborne Saldanha from Emphasis Venture. Welcome to India Fintech Diaries, Osborne. Tell us about yourself and what do you do?
Thanks for having me on, Elroy and Hemant. I've been a long-time listener and a fan of your work, so very excited to be here. I'm with Emphasis Ventures, or EMVC in short. We are a US-based fintech-focused fund that invests in early-stage fintech opportunities.
And great to have you on board as well, Osborne. And I hope that today's conversation is going to be extremely interesting for all of us. Hemant, to get started, what's been some of the funding stats that you've looked at over the last year or so?
Yeah, right. This year, from funding perspective, at least didn't look as good as the last year. Of course, everyone knows that. So this year, till 15th November, the amount of funding which has been raised is about $5 billion. And if you compare this to the last year was about $10 billion. So it is just 50% of what it was last year. And if you look at across how it is split across the different category or stages of the company, the seed stage companies raised about $340 million. The early stage about $1.5 billion and the late $3.3 billion. Now, the seed stage and the early stage fundings, the difference is not much. So the impact was primarily on the late stage funding, where we saw the late stage investor being a little more cautious and playing a wait and watch game or doing a more detailed due diligence and not going by FOMO and investing. So that's how the year has looked like from funding perspective.
Osborne, you've been part of the whole funding industry as well. I'd love to get your perspectives on what's been happening in the year that's gone by.
I think the way we have seen it is, I think I'll break it into two parts. At least in the first half of the year, we've seen a phase of hyper growth for fintech in India. We've seen record products being launched. We've seen record funds being raised, acquisitions happening. You name it, there have been record highs in that first half of the year. But then as we went into the second half of the year, there was a phase that we call the phase of fintech being rewritten, right? The entire playbook of fintech that we've known so far is kind of being rewritten as we speak. And the business models, the revenue models, all that we've seen so far is all being rewritten. And that is something to be definitely very excited about for the next year. Obviously, a lot of this rewriting phase has been driven by regulation, but that makes it even more exciting to sort of build on. And that's how we have seen it, at least this past year.
I think the other thing that I've also noted is from a funding perspective, right? A lot of new funds were also raised in the last 2 years. So, for example, Koana Capital raised about $332 million, which is focused on fintech to invest in emerging markets, right? QED had raised about $1 billion in 2021 and was supposed to deploy about $500 million in India in 2022. And very recently, InCred Credit Opportunities Fund raised about 300 crores with kind of an option to increase that to about 1,000 crores, while the focus is not specifically on fintech, but again, they're looking at investing in private companies at a Series C and D kind of growth stage. Another interesting thing I think that I really want to get your perspective on, and not specific to these funds that I mentioned, but generally, right, given the fact that fintech, as you rightly mentioned, is being rewritten, right, where do you see the opportunities are for fintech funding in the year to come?
Yeah, I think you're right. In addition to the funds that you mentioned, I think there was Beams Fintech as well that raised a 100 million fund. And there were several other early stage funds as well, specific to fintech, that were raised. Right. So you're right that there is a lot of capital that has been raised to be deployed in this sector. From our perspective at Emphasis Ventures, I think we are very optimistic and definitely playing the multi-decade game in fintech, not just in India, but globally as well, right?
Right.
When it comes to India specifically, though, I think just because we've been in the sector for a long time. We still see a lot of opportunity across the fintech landscape. Whether you think of it from a consumer perspective on credit, insurance, wealth, or any of these other products, or you see it from a small business or enterprise perspective, I think there is opportunity to build infrastructure to target a lot of these businesses. We feel that there is an opportunity to co-create new products with existing financial firms and several other opportunities like that. I think what's most important and very exciting about India is that the macro of India is still intact, and that therein lies the opportunity. What I mean by that is that India is still a fairly underpenetrated country when it comes to
Yep.
credit. India is still underpenetrated when it comes to insurance. Wealth, we are still seeing business models evolving. So the macro of India still remains intact, and therein lies the opportunity. The other main aspect that we have seen over the past few years is that a lot of people that have built large businesses in the past, which were non-fintech businesses, those founders are coming and building in fintech. So really credible people are coming and building in fintech, right? And
Yeah.
so a lot of capital will end up going to those founders as well, who have the credibility and who understand how what it takes to build a startup, what it takes to build in a regulatory framework, and those sort of
Yep.
aspects. So capital will go, I think, to in those sectors over the next years to come.
Understood. And Elroy and Osborne, just building on the point that Osborne said, the year, as Osborne rightly said, and Elroy, you'll remember last
Yeah.
year when we were doing the same episode, there was so much excitement around fintech, and there were so many topics, right? We had BNPL being discussed,
Correct.
neobanks being discussed, there were payment firms doing multiple things being discussed, and this carried on for the first half of the year, I think till June. And after the June, the entire environment changed, which a lot of people see it as negative, but, and we were having this discussion earlier, it is in a way a very positive thing the way regulation is moving, because as fintechs were building and they were crossing a certain size, trust was going to become an issue. What is now happening is, because of regulation becoming tighter, and it's be getting driven by regulation, at least that's but that part of it, the trust problem could get solved. And Osman rightly said, because the uncertainty goes away, because earlier there was this gray area in regulation where a lot of players were playing. Now since the gray area is getting reduced, they will be playing in the white of the regulation, right? And when they're playing there, the trust
Yeah.
is there, the uncertainty goes down. So what at least I see is, we are going through this phase of pain, yes, but the pain was necessary for this sector to mature and the investor to become more confident on the sector and invest, as Osborne rightly said, in not only companies that are mature and certain, but also in new entrepreneurs who have already proven them in non-fintech games and maybe are on the head of, in some cases, conglomerates coming into fintech and playing this game as well.
Interesting thoughts, Hemant. I think the other thing I want to just touch on, maybe on a lighter note, Hemant and Osborne, right? What's one interesting company that you think got funded last year, from your perspective? Maybe Hemant, you can go first.
Last year, Elroy was good for me, at least from financial perspective. So I started thinking ki now I'm investing in X amount of areas or the traditional spaces. I still have some extra amount left, which I can't do tax related investment. So what can I do with that slightly extra capital? And that's when I started looking at few firms, and I came across few. So one of them was called a Recur Club. I think they raised a 30 million seed round this year only, where you can finance a company based on their recurring revenues. And they don't go through any equity dilution, and it is a more reliable source of yield being generated for you, which is much higher than the traditional investment places where you can put your capital.
Interesting. Osborne, what about you?
I think, in my view, one of the most interesting companies to have been funded is a company called Bureau.
Okay.
It's a portfolio company, but they are building on digital identity to reduce fraud in financial transactions and things like that, right?
Yeah.
I think it's interesting because in the world of real time payments, in the world of instant finance and things like that, a lot of times fraud ends up becoming a very big problem for a lot of the fintechs that are trying to solve for those kind of problems, right? And it's sort of an underappreciated solution to solve for fraud, and Bureau is sort of attacking just that. But you may say that, okay, well, it's a portfolio company and you're trying to, just pump your own portfolio. So, so I think
No, Osborne will
No,
not
no.
say that.
To be honest, Osborne, I think your portfolio has pretty interesting companies. In fact, one of my picks is also from your portfolio, right? There's this company called Tartan that's looking at
yes,
employee verification. I think what they're doing is pretty interesting in
yes,
terms of solving a problem that most people don't realize they have, right? But from a lender's perspective, getting access to that kind of employee information and verified from the HRMS itself can actually be pretty useful. And to
yes.
be honest, in the long run, a company called Tartan could even actually become a pseudo credit bureau if it plays out well. So it'll be interesting to see what that company does.
Here's hoping. But actually, another company that I really liked that got funded this year, I think they raised about 5 to 6 million, is a company called Bharat X.
Yeah.
Bharat X is a lending infra company.
Okay.
And I think the founders over there are just excellent founders, very young, very hungry, and really quick and nimble to execute. I think I haven't used any of their products, but from my interactions with the founders, I wouldn't bet against them. I think they are onto something and they will build something really.
Good stuff. I think while you talk about funding, right, the immediate other thing that comes to mind is mergers and acquisitions. And the last year or the year that went by, we've seen some pretty interesting deals, specifically in the latter half of the year. So I think very recently, just in November, Credit Vidya, towards the end of November, not even just in November, right? Credit Vidya got acquired by Cred. And it's very interesting, in my opinion, and as to what Credit Vidya brings to Cred from a lending perspective. And given everything else that Cred is doing around lending and a couple of other areas around neo banking, etc., it's an interesting play. What's your view, Hemant?
Actually, more than view, I'm a little confused. I was also trying to think through this. But you see, with Credit Vidya, of course, they are bringing in underwriting expertise, which will help them with the lending game that they are playing. But if you
Yeah.
see Credit Vidya, the core offering they said is we will help you analyze or evaluate credit worthiness of people who are not getting funded, or maybe who do not have basically who have a thin file or no file, right?
Right.
But the target audience for credit is completely different, saying I will only cater to people who have very high credit scores. So yeah, I understand the credit capability being brought in house, but the target audience is very different. So yeah, a little confused as well.
Osborne, what about you?
I think it's an interesting acquisition for sure. Didn't see this coming, honestly, but for I think just building on what Hemant just said, right? Cred is apparently, I mean, at least in the media, is being portrayed as this company that is targeting high credit score users and things like that. But I think there
Yeah.
are a lot of people that end up wanting to use Cred, and Cred has a capability to lend to not just the high credit worthy people, but even the thin file or new to credit sort of customers, right? And even
Yeah.
those customers end up coming on Cred for the commerce offering over there. And so for the people that are thin file or even new to credit, where there is alternate data, I think that acquisition of Credit Vidya to some extent makes sense from that angle, where they can use this alternate data to adequately score and identify the credit worthiness of these thin file and new to credit sort of borrowers. And Credit is doing exceptional when it comes to lending. They've built a very strong book in the country, and I think this acquisition will only do great for them.
I think just kind of riffing off what you said, right? This kind of reminds me of what Tesla did with its entire journey, right? With building out its electric car proposition. Initially, it started with this really brilliant kind of a sports car model, which is expensive, which only very few people could kind of afford, which is kind of equivalent to what Credit is doing with its high credit score kind of audience first, right? And once they kind of really honed that entire building the car strategy with at the top end, they started progressively getting cheaper and cheaper models. And that's possibly what Credit intends to do with Credit Vidya. Kind of then start targeting lower and lower credit scores, finally getting to maybe subprime also for that matter.
Elroy, I think it would be a longer and more deeper conversation that we can have on that, because
Yeah.
now we're getting into spaces of saying whether it will work, not work. Okay, will they go into like categories? Does that make sense? But the thing is, lending is slightly a different game, right? The moment you
Yeah.
get into subprime category and you're planning to lend to them, the collection will become a thing, and the moment you start getting to lower credit scores or extremely low credit scores, the collection keeps becoming more physical and expensive compared to someone who's on a higher side of the credit score and completely maybe credit card kind of customer you are playing in. So yeah, extremely interesting. So we'll have to see how it pans out, but definitely plugs into their lending story that they're trying to build for sure.
I guess moving on to the next one, which is Poshfine by Razorpay. So I'll just give a little bit of background on Poshfine, right? Just before. So Poshfine is purely an loyalty player. And it's interesting that Razorpay picked them up because I don't know how it actually fits into the strategy per se, right? Maybe at some point they also want to bundle an loyalty offering to the merchants that they acquire on the platform. So the proposition to a merchant could be that you take payment aggregation services from us, the payment gateway from us, right? And we'll also give you this loyalty engine that you can just plug in, and then every time someone buys something off your e-commerce website, you can also give them loyalty points. So that could potentially be a play. And Hemant, what about your thoughts on this?
I think I look at a Razorpay acquisition of Poshwine, and I'll speak about it in the later conversation as well. Comes
Yeah.
from the point that any fintech player, as they go into the next part of their game, is now moving from growth to profitability. So that's a conversation to be had. And when you move to a profitability focused play, what you would try to do is you try to get as much as possible from your existing base of customer and also reduce cost. And this
Okay.
one comes on the first part of it, of saying, okay, I have X amount of customers, what more can I do with them? And when the question of more comes in, then you can get into, say, lending. You also start doing wealth. There is a loyalty play that can come in. If you're doing for merchants, then there is a SME banking play, which Razorpay came into, saying Razorpay X. I think it is in that direction of saying, what more can I do with X amount of customers that I already have and I really understand.
I think the other things that have happened in the year in the whole M&A space, right? One was this whole Zest Money acquisition deal by PhonePe that got kind of pseudo-announced by the media, but you're not seeing really a lot of developments on it. But I think the bigger one in the entire space was the whole crash and burn on the Builders deal. So
Yeah.
that was interesting. Personally, I thought that in the end of the day, PayU process finally figured out that they paid too much and they just tried to figure out a way to get out of it.
Yeah, I don't know the background story, but yeah, I wouldn't call it interesting because that was like one of the largest deals in fintech. Would have been good if we'd have gone through. It would have a good story to tell
Yeah.
of the success of the India fintech story, right? I think it's sad that it didn't go through.
Yeah, I agree with Hemant actually on this. Uh, that it would have made for a great story, but more importantly, it would have built a lot of confidence in the ecosystem.
Correct.
Well, even I don't know the details of the deal, but it would have been good to see a deal like that go through.
I mean, the other thing about it was a 2021 deal, and 2021 was the year when everyone went crazy. So it could be kind of a fallout of that entire craziness. And finally, people
Another
sobering up in 2022.
Another acquisition actually that went quiet fairly quickly was the Pine Labs acquisition of Setu,
Yep.
which
Yep.
I thought was a very interesting acquisition that happened. Why it was interesting to me was that Pine Labs is a payments company. They were largely offline, at least in India. And then they launched Plural, which was their online payment gateway. And with the acquisition of Setu, I think it brings a lot of infra capabilities
Correct.
to continue building and pushing through those pipes of payments, which I think is very smart a move. And I've seen this, with payment gateways, payment companies globally, including Stripe having launched their own infra platform. We've seen even Adyen launching their own infra platform.
Yeah.
So it's happening globally, but also in India for Pine Labs to do something like that is quite impressive.
That's a nice one. In fact, I somehow missed having focus on that. Thanks for getting that up, Osborne. The next thing I think we should look at is from a regulations perspective, what happened. It's been a crazy year as far as regulations, right? I mean,
Not crazy. You should say, yeah, Elroy, we should say 2022 was a year when the star was regulators.
and it's not just that. It's literally like this stuff still coming out right now. In fact, just last week, right? There's some interesting stuff they announced again in one of the press releases, etc. They put out. So let's spend a little time and unpack all of that. And I'll probably start this off with something which is a bit easier for all of us. So if you recall in 2021, American Express and MasterCard both kind of got banned for various reasons. And finally, the ban was lifted this year, right? And all of them are back now completely with all guns blazing into the market. And the other interesting thing that finally happened is the whole tokenization mandate finally kicked off on October 1st.
Right.
So that's going to be interesting in the coming years to see whether that actually helps solve some of the problems that it was supposed to solve, right? But I think the big thing that was on everyone's mind in this year was the entire shakeup of digital lending. And maybe, Hemant, you can spend a little time just giving us a little bit of background on that for kind of a refresh, and then we could get to discussing it.
Sure, Elroy. Actually, it can also be broken down into two parts. The first part was the shocker, which was the June circular, which was around not funding PPIs via credit lines. And a lot of firms in the fintech world had built their business models or revenue models around that concept of issuing PPI instruments and over that providing loans, which was very convenient to consumers as well, because it was bringing credit to consumers who were not being served by the traditional ways, right? And it was also getting around, and now we know it was around the credit card regulation, which are already in place. Now, the circular came in that not only can you not fund your PPI via credit lines, but also that when you do a disbursement, the regulated entity, basically the NBFC or a bank or whoever is lending, should disburse it only to the customer's bank account, except in exceptional cases such as home loan and everything, where of course the loan will directly go to the merchant. So with that, the business model for a lot of neobanks or BNPL players came crashing down, and they had to find ways to solve this in a way that will make the regulator happy. And I think there were only few ways, and please add if you think of any others. One was, of course, either they can launch a co-branded credit card with a bank, right, which will be a traditional credit card, or they treat each amount that they give out to their consumers as a separate loan item, which would be problematic in case you're playing a BNPL game, which is a convenience BNPL and not a affordability kind of BNPL game, right? Which was being used by the higher credit score people just for the convenience of it, right? Which was replacing the credit card in a way, right? That's another way of doing it. Or you basically disburse the amount directly to the bank account of the consumer, and then on that bank account you have a PPI card on which, of course, the amount can be moved, but it breaks or creates so much friction within the process that the entire beauty of the earlier process gets lost. So it was, I think, a shocker. And as Osborne pointed out, it kind of was a point after which the entire story changed for the industry. And then you had the new digital lending norms. I'll just point out some key elements that it covered. One was, which I covered, was the amount to be disbursed only into the borrower's bank account. Then the second was all fees and charges which were to be paid to the loan service provider should be paid by the regulated entity, which is either the banks or NBFC, whoever is the entity providing loans. And then it also standardized the cost disclosures, which has to be done by the regulated entity, so that a customer can clearly compare what he's getting from the creditor, because earlier a lot of fees was getting hidden. So people used to only say what the interest rates are, and then there's some additional fees to be paid. Now it is compulsory that you put out an annual percentage rate, which would be inclusive of all fees and interest. So that's also there. Again, the automatic increase on credit limit, which happens on your credit instrument, has to be with the consent of the borrower. And every LSP, which is with a regulated entity, will have to be clearly listed out, and the regulated entity has to ensure that the LSP is kosher, has all kind of processes which are required by the regulator. So very extensive bit of regulations, but the idea is to make the credit industry work in a way which is beneficial to the customer and the risks are reduced for the consumer.
I think the other one that you probably kind of missed out is very recent, right? Which was also changed in the December master direction on securitization. So they introduced an interesting concept that loans with tenure under 365 days could not be securitized anymore.
I don't know the logic, but yeah, I saw the guideline, but I do not understand the logic behind it.
Which kind of hits against any fintech making shorter duration loans, which were expecting to move it off their books or helping the bank move it off their books to securitization. So it's an interesting piece there as well. So with all this kind of a shake-up, where do you think the industry is headed, Hemant?
Some part of it I already covered, Elroy.
Yeah.
I think this was required and pending, and everyone knew that this is going to come. It's just that the shape and form it has come in was a shock to everyone, and the amount of time given to everyone to comply was slightly on the lower side. Even the new digital lending norms, I think, kicks in from November, which is a short time. Everyone is trying to align with that. But going forward, it will also lead to a lot of consolidation in this space, considering the traditional players who wanted to play in these areas or wanted to get more scale or were lacking in digital capabilities may start looking at a lot of these players
Yep.
to get either scale or the skill that they required, and a lot of these companies are available will be available at valuations which would be very attractive for them to get in. So think of all these old school or incumbent NBFCs,
Yeah.
and for them it is like amazing opportunity. So I, at least in this space, expect a lot of M&A activity to start. We'll see how it pans out, but yeah, a bit of consolidation and some amount of M&A to happen in this space.
I think, Osborne, you've been a bit closer to the operating side of these things, right? With your conversations with fintechs, etc. What's been the kind of reaction and the kind of approach that people have started taking to addressing some of these regulatory changes?
I think I'd like to start with saying that I've been a RBI fanboy for over 9 years now. And I think that RBI is an excellent regulator. I don't have obviously experience with regulators globally, but I've always maintained that globally, innovation has always preceded regulation. But I think in India, the opposite has been true for a
Yeah.
large part, at least in fintech in India, right? So, given that, and while the digital lending regulations in India has caused some heartache among startups in India, I think everyone sort of realizes now that the RBI has always cared about consumer rights protection, right? Protecting the consumer to an extent. That's one trend that a lot of fintechs have realized. The second trend that a lot of fintechs have realized is that if you want to build a fintech startup in the country, you need to be licensed entity, right? And so there is, to I think Heman's point, that there is going to be a consolidation or acquisition of an entity which owns a license by fintechs, right? So fintechs are going to start acquiring entities or starting to apply for new licenses. And that's definitely going to be a trend that stays. I think a lot of fintech startups are also starting to realize that because of regulations, you need to start owning as much of your business model as possible, which
Yeah.
means a lot less outsourcing, a lot less sort of partnerships and things like that, which to some extent requires a lot of capital. And therefore, I believe that the larger companies of fintechs, financial services firms, and things like that are going to have a bigger and a larger upper hand in financial services in the country. This will make starting up in financial services a lot more expensive and will require a lot more capital. So I think people are starting to realize that as well because of these regulations that has happened. And I think a last part that I would like to also sort of highlight about regulations is that RBI has made financial services regulations kind of glitzy, and everyone talks about RBI. But I
Yeah.
think the regulator that has been forgotten is IRDAI. Actually,
Yes.
I
I
mean,
totally forget them all the time because I never dealt with insurance. Heman keeps reminding me that there is something called insurance also in the country.
yeah, and I think for a large part it was IRDAI's own doing, which is why I mean they were a lot more risk averse, which is why there wasn't a lot to be done in
Yeah.
insurance. But I think just this past year, since the new chairman has been appointed, I think the pace of new approvals, regulations, and things like that has a lot of really amazing implications for the ecosystem in insurance, and I'm very excited about that space.
It's a good segue, Elroy Osborne. So I'll just cover one part on insurance. So there is a recent set of reforms, expected reforms that have been exposed by the Department of Financial Services to the industry. And these are very interesting ones if you see. One of them is a composite license. Today, you have a general insurance license, you have either a standalone health insurance license or a life insurance license, and then the other distribution license, right? A composite license would help you to play life, health, general, all these games together. So that's one. And these are all in discussion, but extremely powerful reforms being discussed. The other one is allowing insurance players to sell other financial products. considering that a lot of these insurance players have good penetration in the deeper part of the country and can also benefit from the revenue that they get by selling other financial products, because purely from general insurance perspective, Elroy and Osborne,
Yeah.
they have a negative underwriting income. Nearly all of them. I think there will be only one or two who would have a positive underwriting income. All their income today on which they would make profit will come from investments. Now, because of that, if they also start getting income from selling other financial product, it will augur well to make them profitable slightly earlier compared to
Okay.
what the general space is. And the third one, which I'm really excited about, is there is a minimum capital requirement of about 100 crores to start a insurance firm. And there's a discussion on this saying that can we adjust that minimum capital requirement based on the scale and the size of the company which is planning to start an insurance play. That would be very interesting. And the last one is, I think, plays into well for large business houses, which is a captive insurance license, which is basically you take an insurance license, but you only serve all the companies within companies and people under your group.
Okay.
So that would be an interesting one as well. So a lot of reforms, and thanks to Osborne to bring IRDI up, but regulations that are being discussed, reforms that are being discussed, which are then a lot of them are already getting pushed through. For example, one was how many insurers a bank can partner with,
Yeah.
right? Which enables them to sell multiple insurance products over multiple players. That has already happened. So yeah, a lot happening on the IRDI regulation side as well.
Interesting stuff, Hemant. And the other area that I think was interesting in this year, everyone's favorite fintech poster child UPI also had lots of stuff that was happening, right? So there was credit on UPI that got introduced. There was UPI 123 Pay that got introduced, which was a UPI payment on feature phones that was introduced in March. Then we had UPI Lite. I don't know whether you have had a chance to try this out, either Hemant or Osman. Have you tried UPI Lite yet?
Not yet, Elroy.
Yeah, I
Yeah.
think it's just started rolling out because it's available on Beam right now and a
Mhm.
couple of the other apps. So we should definitely give it a shot and see how that actually works. At least it's been pretty seamless in the quick test that I did. And very recently, the last one they introduced was this whole concept of UPI's single block and multiple debits. Now, all of these, I think, will open up new avenues for innovation as far as fintechs are concerned and help them get maybe new features or models in the space.
No, I think product managers at NPCI, especially the UPI product managers, have been have had a pretty busy year, moving in the right direction because UPI primarily was being used on smartphones. So a big half of the country was getting left out
Yeah,
from an innovation that was having a massive impact on the world. And with both UPI Lite, UPI 123 Pay, we have been able to bring that set of people under the umbrella of UPI, and we will see that impact going forward. Credit on UPI is very interesting because one part I did not cover on the PPI bit was that we have to find a way to put credit on a payment channel, right?
yeah,
Which today one channel is of course credit card, which is fairly limited. The only NBFCs who have access of issuing credit card today, I think, is only Bank of Baroda and SBI, right? Others don't have access. So there has to be a way to put credit on UPI channel, and this is looks like a first step going in that direction where UPI credit card can be linked. It would be good to see in the future even Visa, Mastercard getting linked to this and payments or credit happening on UPI through via this.
I think the other experiment they did, which was overdraft on UPI, didn't really take off as they expected, which was the other way to get credit on UPI. But
Yeah.
let's see how this pans out. Osborne, I remember you tweeting sometime back about the whole changes that they did in BBPS, right, to allow anyone to become a biller. Maybe you could talk a little bit on that as well and the implications of that.
Yeah, I think this was announced literally just this week, the first week of December for by RBI, and I think this is a fairly interesting update with regard to Bharat bill payment system,
Yep.
where any merchant can become a biller on this system, right? And I think this sort of could be an evolution of UPI autopay or the eNash system and things like the other recurring payment systems that we have in the country, where Bharat bill payment system just works compared to the other platforms that are there, right? And I
Yeah.
think with any merchant or any startup being able to become a merchant really opens up the floodgates when it comes to billing a user, sending notifications to the user, and charging subscription-based product lines to the user,
Right.
right? So I'm very excited about this. I'm sure there will be a little bit of problems initially when it comes to execution, and because there will be so many people or so many merchants that will want to become billers on the platform, there will be issues initially. But I'm very optimistic about that.
I think from my perspective, I found this a bit kind of how should I put it, a bit repetitive, because you already had this entire set of regulations and changes that they did on the SI front, right, to cater to cards, and BBPS also supports cards. So it'll be interesting to see what happens, because a lot of firms have made considerable investments to bring SI related products in line with regulations very recently. And now with this whole BBPS concept coming in, that kind of eats away at the same subscription space. It'll be interesting to see if there's some kind of startup that comes up that actually leverages BBPS to disrupt some of the incumbents in the SI space. So that's what at least from my perspective, I'll be really watching out for. And finally, Osborne, here's a tongue twister for you. What do you prefer, e-rupee or e-rupee?
This is a very interesting question. I will stick to CBDC, or central bank digital currency.
Yeah, because there's too much confusion over the similarly named products, right? Because you had e-rupee come out with the central bank digital currency, and sometime back, NPC had also introduced its kind of voucher-based system. It was actually a play on the words UPI, which was ERUPI, but you pronounce it the same way, so hence the confusion.
Absolutely. But I was able to see an early video of the RBI CBDC in action in an SBI app, and I was quite blown away by the implementation of it. I am very optimistic and excited to use it. I don't know how this will work in the wild, but very optimistic and very excited to be able to use it and see it in operation.
To be honest, it's a step in the right direction, but if not properly executed, right? And going to the discussion paper that put out, the Reserve Bank had put out on CBDC, they seem to have thought through it pretty well and considered all the implications of it. Because fundamentally, it changes the way money is created in the system, right? Because typically you have banks that contribute a significant amount to money generation in the system, and by using a central bank digital currency, where invariably you are actually holding an account with the central bank,
Right.
where your money is held instead of the bank. It has implications for the overall economy as well. And I'm actually happy that RBI has put in enough thought in those areas before it actually went ahead with the pilots on both on the wholesale as well as the retail front. Well, moving on, I think when the year started, none of us thought that there'd be a war in Feb, right? None of us thought that the West would see double-digit inflation, right? And none of us thought that the RBI would raise rates 5 times this year, with the latest being bring the repo up to 6.25%. So with these kind of impacts on the lending rates, inflation kind of eating into savings, and more recently job losses, right? What is your take on what this means from a macro perspective on the entire lending space?
Yeah, I think Elroy, yes, we are getting into, as I said, slightly more painful times. The consumption and what I've always seen is when such a cycle starts, for the larger India to realize this and it to have an impact, there is always a lag, right? So right now, immediately we don't see it, but the lending business in the last basically the next 6 months or about a year will get slowed down, especially on the consumption side. Whatever is necessary will continue, but anything that is discretionary, we may see an impact there. Considering that the income is going down because of maybe job losses, I think the job market is also tightening up a bit, and taking a loan is becoming expensive. So on the one side, the loans are expensive. The other side, things that you want to buy are becoming more expensive. It is going to have an impact on amount of loan that people take out for discretionary spend.
Osborne, your thoughts on this?
I think I'd like to preface my thoughts by saying that I am not a microeconomist. I'm not a microeconomist.
None of us are, to be honest. None of us are.
I'm an engineer by education. And so
I think all three of us are engineers.
So I'd just like to say that obviously don't know what's going to happen in the coming year,
Yeah.
But I'm kind of in a dilemma. I mean, because what I'm reading at least these days is India's consumption is at all-time highs. Right? We've seen record sales at a lot of the e-commerce platforms. We've seen record car sales in the country. We've seen record GST collection.
Yeah, and if you look at Instagram, it looks like everyone's vacationing in Vietnam.
Yeah, precisely. So, I mean, flight costs, hotel costs are again the highest that I've seen, at least in the recent past, right? So all of those aspects sort of would show that there is a lot of consumption still happening in the country. I don't know. I'm personally cautiously optimistic about 2023, where I don't think that spending will last. And so, from a lending perspective in the country, would again be cautious about disbursals, but more importantly, would focus on collections and things like that, right? So I think discretionary spending might slow down. Again, this is
Yeah.
just a hunch. I can't say for sure, and I can't even say when, but that's where at least I'm seeing it, and I'm obviously cautiously optimistic about 2023.
I think the other interesting one that was announced or kind of alluded to in the press, right, in the last year was this whole concept of Reliance finally making an entry into fintech. Hemant, what's your high level thoughts on this?
That would be very interesting, but my last guess on a large player entering has not gone so well. I thought WhatsApp coming into payments would be a big thing. Everyone will run helter and skelter, but it has not made a big splash. But having said that, with Reliance, if you look at their current, and it was always supposed to happen, right? Because their current subscriber base, if you look at, is about, I think last number I saw was 400 million, approximately 400 million, and their current average revenue per user is only about $2. So they're not really making a lot of money on the subscriber base that they have right now. But as always, the plan was to generate a lot of data and then run other businesses on that data. And financial services, I think, is a perfect fit, which will fit very well into their current telecom play, but also the retail play, which is built on the telecom play. So that would be an interesting thing to see. And if you were to just compare, look at the largest NBFC today, and they basically Bajaj Finance, and they have a customer franchise about 50 million. So even if out of 400 million, they are able to get about 50 million or around that number into their financial services arm, especially on the lending side of it, it is a very strong business they can build, and then they can extend it, right? They can build a single one-stop shop for all financial services need, where they understand you much better than any other financial services can understand you, based on your not only your telecom usage, data consumption, but also your purchase history of what you're buying and how you're buying. And their relationship with, of course, WhatsApp and everyone makes it easier for them to reach out to a lot of people.
Osborne, any thoughts on this?
I think in addition to Reliance, even Tata launched their financial services arm as
Yeah,
part of
that's right.
Tata Neu as well, right? So it's amazing to see all these large companies now getting into financial services, largely lending and insurance and all of those, which ties into their existing businesses of retail and other aspects, right? I think if they really execute well and build it contextually, as opposed to just providing a plain vanilla, let's say, personal loan or motor insurance or health insurance. I think if it's contextual and maybe at the point of sale, which they have, both these companies have a big say in how the checkout process works, how distribution works, and things like that. If they're able to execute well on those aspects, I think they will be a force to reckon with.
Right. One point was that I think it is interesting that these large players are doing this, but I think our family run large businesses had this figured out long back, that if you have a customer franchise on your traditional business, it makes sense to build a financial services business over it instead of giving that business to someone else. You look at, say, a Chola or a Hero or a TVS, they've been doing this for ages.
Right.
They started with a business which was a completely different traditional business, which could be automobile or bicycles or whatever. And then quickly realized that to buy this, people need money. Why don't I open an NBFC? Once you have an NBFC, they realize, okay, I already have people. Why don't I also buy a insurance company, which is what Chola did long time back. So I think this is not a new thing. It's just that it is coming into focus now. But our traditional business houses or family run businesses figured this out long back.
You're right, Hemant. Osborne, I had a quick question for you. In your day job, when you look at investing into various firms, right, do you do a lot of research in terms of actually downloading some of these fintech apps and trying them out?
Yeah, unfortunately, it's an occupational hazard where you have to use all these apps, and I think I have accounts in almost all these fintech startups. Unfortunately for my CA, he has to sit and reconcile all my accounts across various mutual funds, various neobank startups, and all of this stuff. So yes, in short, yes, we have to try this.
What's the one app that really stood out for you in the last year?
I think for me, one app that I really loved using was Neo Global,
Okay.
where they have this amazing travel card for people that travel abroad. And I think it's your standard sort of neobank account via an app and stuff like that. But what was really amazing for me to see is just how much I saved from my international travels, right? And on almost every transaction, I saved about 100 rupees at minimum. So, and at the end of my travel, they even sent me an email saying that I had saved in 2.5 weeks, I saved almost 8,000 rupees. So I was pleasantly surprised and didn't expect that kind of service. And I was amazed by that sort of experience with them. So that was, I think, the best app that I used this year.
In fact, I've been a new evangelist of sorts, right? I convinced Hemant to get one card as well.
Yeah, I'm still using it.
It's
And
amazing.
the very second episode we did on this podcast actually featured Neo. So they were kind enough to kind of be the first inaugural guest to come on board. So that was
Yes.
interesting for us as well.
Vinay as well is an amazing founder.
Yep.
I think have had interesting conversations with him about banking in the country, and he has a very unique view about it. So it's no doubt that he's built a company like this. So
In fact, for me, an app which I literally tried out last night and I discovered it quite by accident in the last couple of days is something really kind of left field, right? So the Reserve Bank of India actually has this app called Money, MANI. Okay. So this is kind of geared towards the visually impaired. It's an app that someone who can't see, who's blind, or has some kind of visual impairment can actually download on the app, control it using voice commands. And the cool part of it is it uses your camera to scan a bank currency note and tell you the denomination of the bank currency note.
Interesting.
So I found that pretty cool. And the fact that the
It's-
Reserve Bank is actually building out stuff like this as well.
Yeah.
it is amazing.
Yeah, they should do more on promoting it though. It would be good for people to know about it. It's an amazing app. Interesting. On Elroy, on my side, actually, there are a couple of them that were very interesting for me, and I've always been very interested in embedded financial services. So, and when I was booking my vacation for this year, the year-end vacation, I came across that I kept getting these WhatsApp messages from Trip Money, and I, for a second, thought there is a fraud message coming to me. I don't know who Trip Money is, right? And then I realized and looked into it because, as Osborne said, we are in fintech, so we have to look into who is trying to sell insurance to you, and figured out that Make My Trip has created their own financial services arm, which is Trip Money, and they have done multiple investments across other fintechs, and they are the ones who are either trying to sell insurance products to you, or they're also providing loans for you to actually plan your vacation. So which is very interesting, right? Quietly being done, but another example of a player from a completely different industry doing a financial services business and doing it well though. So I ended up buying insurance through them because they kept ringing me, but they caught me at the right time, right? Because I was anyways booking it, and there is not much differentiation when it comes to travel insurance, and the number is also small. So that was very interesting for me, for sure. No, and the second one was Tyke. I was always very interested in making an investment in a startup, but the numbers are always so big. At least my salary does not match up to the number of saying now I can start making an angel investment. So these guys came up and said that you can make an investment in a startup. Of course, they say 5,000, it will be slightly higher, but that's very interesting because I always thought to become an angel investment, the ticket sizes are always in the range of, say, a 10 lakh or something. But that's another one which I found really interesting.
I think now it's time to look at predictions for the next year. So
Oh, I love this game. We make predictions and all the time they're wrong next year, but still.
yeah, you can't really do much for stuff that you can't plan for. But generally, what do you think is the top two predictions for next year?
Yeah, I think the biggest one for me is the movement from growth focus, which was the focus for last year, moving into profitability. And as I said, the moment the focus will shift to profitability, either they will try to get more share of wallet of their existing customers, where because a lot of fintech have built a large customer base, or they would try to get more out of their current cost structures that they have built. So you will see a lot of either acqui-hires or acquisitions or partnerships happening on the side of a company playing in certain area, trying to partner with someone providing a different financial services or non-financial services to get more share of wallet from their consumers. On the other side, the larger fintech firms, you will see a lot of them taking up efficiency improvement or cost optimization kind of work in their own organization to ensure that they are being run very, very efficiently, which may include, of course, also hiring of people who have expertise in those particular spaces.
Osborne?
I have a lot of thoughts on this, and one hope for next year. The one hope that I have for next year is that I hope we, as an ecosystem of fintech startups, investors, builders, and all of us, we engage more and have more conversation with the regulators. I think from early stages, we need to have those engagements and conversations. The RBI, at least from whatever I've heard, is more than interested to learn from the latest innovation that's happening and actually further those innovations, right? Or protect those innovations to some extent. And so I hope we have more of those engagements in the coming year. That's one. When it comes to predictions, quite a few. I hope they all come true. But one prediction that I hope happens is the exit of tourist founders in fintech and the and serious builders or true builders sort of staying in and continuing to persist and build in fintech. I really hope that happens. And I think, at least given the recent regulations and all of that, a lot of people have started to have existential thoughts about fintech in the country, but I don't think there is an existential threat. I just think that the hype and tourism around fintech in India will sort of reduce and the serious builders will continue to build, right? So I think that is one. Second is I believe that there could be a lot of consolidations in the country, larger fintechs acquiring smaller fintechs, banks acquiring fintech startups, and those sort of consolidations as well. We've already seen that happen this year. Another thing that, again, that I hope happens next year is the focus on fraud prevention.
Right.
I think we've focused a lot on distribution and new innovative products and co-creation and things like that. But from a fraud prevention perspective, we've put very little emphasis. There's already very little data around it. I think focusing on fraud prevention is going to be very crucial for the coming year, and I think it's something that I think will continue to happen in the country.
Those are really interesting thoughts, Osborne. From my perspective, I think, let me break this up into maybe 2 or 3 parts, right? From a payments perspective, I think the next year is finally going to be the year when we figure out whether the PPI model will continue to be something that's viable, or we'll finally see the death of the wallet.
Elroy, you are quintessential doomsayer. Every year you have one of those things saying ki, last year it was neobank, whether they will stay or die. This year it is PPI model.
My last year's prediction came somewhat true, right?
That is true. Okay, go ahead.
And the reason I say this is because with all the innovations that are happening in UPI, there's simply no reason for someone to use a wallet. The latest one, which is UPI Lite, kind of mimics the pseudo wallet. So it'll be interesting to see whether that model evolves into something better next year, or we finally see the final nail in its coffin next year. The second interesting area I think that's going to be 2023's primary focus is this whole banking as a service piece. That's a trend that's really catching up in the West. Pretty much every bank worth its salt is doing some investment or the other in that space. And within India also, there's a lot of stuff that's happened, right? If you see the latest news that is in the press about SPM reportedly trying to raise money, pitching itself as a banking as a service player in India, that is an interesting play that will play out in the coming year. And the reason I say it's interesting because as more and more smaller banks look at it as an avenue to increase or get more customers as a flywheel to kind of increase customer acquisition, it's going to be increasingly going to attract the attention of the regulator. And I wouldn't be surprised if somewhere towards the mid of next year, the regulator actually started coming out with specific guidelines on digital banking and neobanking, specifically focused on the BaaS end of the equation and less on the fintech side of the equation. And I think the final thing that everyone will eagerly await for in 2023 is the whole crypto bill. And depending on what shape and form that takes, it's going to really change how crypto is actually looked at in the Indian space. I'm hoping it's a more positive and forward-looking space, which will further give impetus to builders, especially since they've been hammered in this entire year with the entire crash that's happened in crypto. So I think that's more or less what I had in mind from a prediction standpoint.
So from that, Elroy, now I remember, as usual, I have all left wealth and insurance. So I'll just cover like
Yeah.
a couple of trends that I see in those two areas. One is insurance, as I was talking about. You will see a lot of distributors moving into manufacturing of the insurance product, which has started happening. And you will also see a lot of manufacturers also trying to get into distributor, because as I said, a key trend now is we are getting back into the stage of rebundling, right? Every, like
Yeah.
last year, the year before, the trend was there was unbundling happening and saying I'll do one thing well, and I'll acquire customers. Now the thing of acquiring customers is going to continue, but they have already acquired customers. The question is about getting more out of them. And that's why there will be a trend of the manufacturer who already have a license trying to do distribution to get more money, and the distributors who have the customers but they're not really getting a lot from it because of even the regulator saying you can how much you can pay to a distributor for selling insurance, right? Because finally you don't want a conflict of interest there.
Right.
So they're also trying to get into manufacturing, saying let me get a license to create my own products, because for a long time there is a lot of distribution innovation that has happened in insurance, but not so much on the product side. There is happening, but on a smaller scale. So there is a lot of effort on that side. So that's one big trend I see, that you will see a lot of product innovation happening and people from distribution getting into manufacturing, and the other way around as well. The other one is that post the COVID time that we saw, the health insurance growth has really picked up, right? So last 4 years, it has been growing at about like 26%, which is the highest. Motor still dominates the general insurance with like 45% of the GDPI, but health is growing really, really fast. So we expect to see a lot more happening on the health insurance side as well. Maybe there will be an ecosystem play happening in health where they will try to cover, insurer will try to cover you from all sides as far as health is concerned. So that's on the insurance side. The second is in the wealth, which has a similar story to insurance because kind of similar product. So the revenue to be made or profit to be made is primarily on the advisory side of it, because just the broking bit, the margins have become really, really thin, right? It's a very, very competitive market. And that's why you also see a lot of these brokers trying to get into AMC businesses where they want to create their own baskets, advise customers on where to invest in all. So, and I think Zerodha Grow are already in play to get an AMC license from that perspective. So you will see people moving into this end-to-end wealth management, one-stop shop kind of offering. The second bit that you can see a lot of action on is maybe people trying to invest in alternate assets, which could be a fractional real estate kind of business or a startup investment, or as I said, Trigger Club kind of companies where it is revenue based financing, or Get Vantage kind of companies where people can get in. One, I think we should cover some trend at least on the incumbent side. So, one on the incumbent side would be I see a lot of banks now focusing on very niche profit pools. And the example I will take is if you look at purely just the ICICI, in last a year or so, they have launched one theme or ecosystem focused product on the education side. You will see a lot of ads. You would have seen products coming out. They have launched InstaBiz, which is saying we'll do a lot of SME focused, small business focused, offering not limited to financial services only in all these cases. And I think there was third on travel as well. So there is a lot of ecosystem focused play happening from the banking side as well, there where they're saying, let me get into a particular ecosystem which has a large banking profit pool, and let me give everything to them that they require, not only financial services but non-financial services, and try to capture that pool. So those were the few things that I had on my mind, which I think
This is amazing, and I hope everything both of you have said comes true. There's so much to be excited for fintech in India.
Definitely, Osborne. Osborne, it was great having you on the show, and I hope you had a great time chatting with us as well.
I did really appreciate you having me on this podcast, and I hope this adds value to how your listeners think about fintech in India.
If our listeners wanted to get in touch with you, Osborne, what's the best way to do that?
I'm fairly active on social. I'm on Twitter at OS7BORNE.
Yeah.
My email is os@em.vc. And I reply to everyone. I love cold emails. So happy to hear from anyone.
And Osborne has just been a bit too modest. He also runs a brilliant fintech newsletter. Maybe you should talk a little bit of that as well, Osborne.
Yeah, sure. Thanks for that, Roy. I think in the pandemic year of 2020, I started a newsletter called Fintech Inside, basically covering insights on fintech, new business models in fintech in India, trying to draw on inspiration from fintech in Southeast Asia as well, where I cover a little bit of the news over there. And I go really deep on certain topics around fintech in India. Thankfully, and to my surprise, it's been read by some really strong personalities in India and globally, including founders, investors, regulators, and all of that. So it's been quite an experience. So
Excellent. We'll include the details to the Substack as well in the show notes. So if anyone wants to subscribe to this brilliant newsletter, they can do that as well. Thanks once again for being part of the show, Osman.
thanks, Elroy. Thanks, Hemant.
That's it from India Fintech Diaries for this week and this year. As we sign off for the holidays, we hope all of you have a great end of the year.